Hey, Amanda Stigler here. Thanks for joining me as we go through the IRS's tax guide for small businesses who file using Schedule C. So I'm going to pull up this publication here, and we are just going to read through it together. So this is IRS Publication 334 for tax guide for small businesses for individuals who use Schedule C. So this is going to be for those small business owners who are independent contractors, freelancers, DBAs, sole proprietors, or single member LLCs. And we've got lots in here. So the contents include what's new for 2022, what's new for 2023, reminders, photographs of missing children, Chapter 1, filing and paying business taxes, Chapter 2, accounting periods and methods, Chapter 3, dispositions of business property, Chapter 4, general business credits, Chapter 5, business income, Chapter 6, how to figure cost of goods sold, Chapter 7, figuring gross profit, Chapter 8, business expenses, Chapter 9, figuring net profit or loss, Chapter 10, self-employment SE tax, Chapter 11, your rights as a taxpayer, Chapter 12, how to get more information, how to get help, and then the index. So let's go through. This is basically everything that you need in order to know how to file your taxes as a small business owner. So this is really, the IRS publications are really key to go through. So let's go through them together. So for future developments, for the latest information about developments related to Publication 334, such as legislation enacted after it was published, you can go here to the website. Introduction. This publication provides general information about the federal tax laws that apply to you if you are a self-employed person or a statutory employee. This publication has information on business income, expenses, and tax credit that may help you as a small business owner file your income tax return. This publication does not cover the topics listed in the following table. So business expenses will be a good one to go through. Record keeping and S corps and starting a business. So we can go through those in another video as well. So are you self-employed? Great question. You are a self-employed person if you carry on a trade or business as a sole proprietor or an independent contractor. You do not have to carry on regular full-time business activities to be self-employed. Having a part-time business in addition to your regular job or business may be self-employment. So basically meaning you can be working full-time as an employee and have a side business. That is still considered self-employment. So there's lots of different scenarios. So if you're in business, you are self-employed. So what does that mean? What is that business definition? So trade or business. A trade or business is generally an activity carried on to make a profit. The facts and circumstances of each case determine whether or not an activity is a trade or business. You do not need to actually make a profit to be in a trade or business, as long as you have a profit motive. You do need to make ongoing efforts to further the interest of your business. So in order to determine if you are in a business, if you are self-employed, is that the key point here is that your intention is to make money doing this activity. You may not be making money for some time, but as long as your motivation is to make money and you are always growing and working and trying to figure out how to make the profit grow and to make it a profit, that is a business intention. Limited liability company, or LLC. That's a key point right there. A lot of times people misunderstand that LLC means limited liability corporation, when in fact it means limited liability company. An LLC is an entity formed under state law by filing articles of organization. Generally, for income tax purposes, a single member LLC is disregarded as an entity separate from its owner and reports its income and deductions on its owner's federal income tax return. For example, if the single member LLC is not engaged in farming and the owner is an individual, they may use Schedule C. So it is also misunderstood that if you have an LLC, that you get all these different tax benefits, when that's not the case. An LLC is a legal state entity. It is not a tax entity. The IRS does not recognize an LLC as a tax status. Rather, if you form an LLC as a single member and you don't make any sort of tax elections, you are, in the eyes of the IRS, a sole proprietor, and you'll file on a Schedule C, just like you would with a DBA or being a freelancer or an independent contractor. Sole proprietor. A sole proprietor is someone who owns an unincorporated business by themselves. You are also a sole proprietor for income tax purposes if you are an individual and the sole member of a domestic LLC, unless you elect to have the LLC treated as a corporation. So there's where the benefit of having an LLC comes into play. You have the option to make this tax election to be taxed as an S Corp or a C Corp, which do have their benefits on their own when you are profiting a certain amount of money. Usually, I like to recommend at the very minimal profiting at least $60,000 a year before you make these tax elections, where you actually start seeing some benefit, but every situation is different. Another benefit too is if you plan to have multiple owners, or some of your owners are foreign entities or foreign residents, having a corporation, the LLC tax as a corporation, can be beneficial there. Independent contractor. People such as doctors, dentists, veterinarians, lawyers, accountants, contractors, subcontractors, public stenographers, or auctioneers who are in an independent trade, business, or profession in which they offer their services to the general public are generally independent contractors. However, whether they are independent contractors or employees depends on the facts in each case. The general rule is that an individual is an independent contractor if the person paying for the work has the right to control or to direct how the results of the work and not how it will be done. The earnings of a person who is working as an independent contractor are subject to self-employment taxes. For more information on determining whether you're an employee or independent contractor, see Publication 15A, Employer Supplemental Tax Guide. So the big thing here is to determine if you are an independent contractor or an employee. And like they're saying is, if you are an employee, the employer has control over your training, how you do your job, your schedule. They have control over everything that you are doing. As an independent contractor, they tell you what results they want, and then you determine how to get to those results. And you usually have your own supplies and your own training, and you get it done in your own schedule. Are you a statutory employee? A statutory employee has a check mark in box 13 of their Form W-2 wage and tax statement. Statutory employees use Schedule C to report their wages and expenses. Business owned and operated by spouses. If you and your spouse jointly own and operate an unincorporated business and share in the profits and losses, you are partners in a partnership, whether or not you have a formal partnership agreement. Do not use Schedule C. Instead, file Form 1065, U.S. Return of Partnership Income. For more information, see Publication 541, Partnerships. So, if you guys are married and you both are in this business together, sharing the profits and losses, and the IRS sees you guys as a partnership, so you have to file a separate form called the Form 1065, regardless if you have any formal paperwork in place. Except, there's an exception, the exception is community income. If you and your spouse wholly own an unincorporated business as community property under the community property laws of a state, foreign country, or U.S. possession, you can treat the business either as a sole proprietorship or a partnership. So you have the choice. States with community property laws include Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. A change in your reporting position will be treated as a conversion of the entity. See publication 555 for more information about community property laws. So, same situation, you're a married couple operating a business. In these community property states, you have the option to report, each of you report a Schedule C, and you split the business's profit and loss, your income and your expenses on 2 Schedule Cs, or you can report it on a 1065 as a partnership. Doing the separate tax return could end up costing you more fees because you're paying for 2 tax returns, the partnership and then your individual tax return. So it's important to speak with a tax professional to determine which is best for you. Another exception is a qualified joint venture. If you and your spouse each materially participate as the only members of a jointly owned and operated business, and you file a joint return for the tax year, you can make a joint election to be treated as a qualified joint venture instead of a partnership for the tax year. Making this election will allow you to avoid the complexity of a Form 1065, but still give each spouse credit for Social Security earnings on which retirement benefits are based. For an explanation of marital participation, see the instructions for Schedule C, line G. Caution, only businesses that are owned and operated by spouses as co-owners and not in the name of a state law entity qualify for the election, the qualified joint venture election. Thus, a business owned and operated by spouses through an LLC does not qualify for the election of a qualified joint venture. So that's important to know. If you do have an LLC that you're both operating, you are unable to make that election to be a qualified joint venture. You would have to file that partnership on Form 1065. To make this election, you must divide all items of income, gain, loss, deductions, and credit attributable to the business between you and your spouse in accordance with your respective interests in the venture. Each of you must file a separate Schedule C and a separate Schedule SE, which is for self-employment tax. For more information, see Qualified Joint Ventures in the instructions for Schedule SE, self-employment. Some additional information. What you need to know. Table A provides a list of questions you need to answer to help you meet your federal tax obligations. After each question is the location in which this publication where you will find the related discussion. So let's visit Table A. What you need to know about federal taxes. Note, the following is a list of questions you may need to answer so you can fill out your federal income tax return. Chapters are given to help you find the related discussion in this publication. So what must I know? What kinds of federal taxes do I have to pay? How do I pay them? And we'll get to them in Chapter 1. What forms must I file? Chapter 1. What must I do if I have employees? We're going to see employment taxes in Chapter 1. Do I have to start my tax year in January, or can I start it in another month? Accounting periods in Chapter 2. What method can I use to account for my income and expenses? Accounting methods in Chapter 2. What must I do if I dispose of business property during the year? Chapter 3. What kinds of business income do I have to report on my tax return? Chapter 5. What kinds of business expenses can I deduct on my tax return? Business expenses in Chapter 8. What kind of expenses are not deductible as a business expense? Expenses you cannot deduct in Chapter 8. What happens if I have a business loss? Can I deduct it? Chapter 9. What are my rights as a taxpayer? Chapter 11. Where do I go if I need help with federal tax matters? Chapter 12. Okay, it's a very helpful chart with some quick links there. The IRS mission: provide America's taxpayers top quality service for helping them understand and meet their tax responsibilities and enforce the law with integrity and fairness to all. Comments and suggestions, you can go to that website or write to them. getting answers to your tax questions. You can also do the interactive tax assistant. Okay. So some other helpful information that you can go through there. You can order forms. Okay. So let's go through what's new for 2022. If you filed your extension for 2022, so today is August 1st. If you filed your extension for 2022, that is due October 15th. So we'll go through what's new for 2022. Maximum net earnings. The maximum net self-employment earnings subject to the Social Security part of the self-employment tax is $147,000 for 2022. There is no maximum limit on earnings subject to the Medicare part. So what this means is if you have a profit in your business of something greater than $147,000. So let's say you made a profit in your business of $150,000, and that's what's recorded on your Schedule C. What that means is on the form, the Schedule SE, to calculate your self-employment taxes, your profit up to $147,000 will be subject to the Social Security portion of the self-employment tax. The $3,000 above that limit will not be subject to the Social Security portion of the tax. However, Medicare is applicable to any profit. There is no limits to your earnings for that. Standard mileage rate. For 2022, the standard mileage rate for the cost of operating your car, van, pickup, or panel truck for each mile of business use from January 1st, 2022 to June 30th, 2022 is 58.5 cents per mile. The business standard mileage rate from January 1st, 2022 to December 31st, 2022 is 62.5 cents per mile. So they did a change mid-year. So this is why it's important to have a mileage log so you can see the date in total of miles for each month, and that way you can figure out this difference. New Form 7205, Energy Efficient Commercial Building Deductions. This new form and its separate instructions are used to claim the Section 179D deduction for qualifying energy-efficient commercial building expenses. See Form 7205. Qualified paid sick leave and qualified paid family leave payroll tax credit. The amount of any payroll tax credit taken by an employer for qualified paid sick leave and qualified paid family leave under the Families First Coronavirus Response Act and the American Rescue Plan Act. See Forms 941 and 944. You must include the full amount, both the refundable and non-refundable portions of the credit for qualified sick and family leave wages in gross income for the tax year that includes the last day of any calendar quarter with respect to which a credit is allowed. Note, a credit is available only if the leave was taken after March 31st, 2020 and before October 1st, 2021, and only after the qualified leave wages were paid, which might, under certain circumstances, not occur until a quarter after September 30, 2021, including quarters during 2022. Business meal expense. For a limited time, business meals are 100% deductible under certain conditions. See Meals and Lodging later for more information. That was specifically for 2022. For 2023, meal deduction is back down to being 50% deductible. What's new for 2023? Maximum net earnings. The maximum net self-employment earnings subject to the Social Security part of the self-employment tax is $160,200 for 2023. So like we talked about in 2022. So if you have profits greater than $160,200 from your business, your profit is going to be taxed for Social Security for the self-employment tax up to the $160,200. Anything greater than that is not taxed for that Social Security portion of the self-employment tax. The standard mileage rate. For 2023, the standard mileage rate for the cost of operating your van, car, pickup, or panel truck for each mile of business use is 65.5 cents per mile. Some reminders before we get into the first section. Self-employment tax payments deferred in 2020. If you elected to defer self-employment tax payments from 2020, see how self-employed individuals and household employers repay deferred Social Security tax. Excess business loss limitation. Your loss from a trade or business may be limited. Use Form 461 to determine the amount of your excess business loss, if any. Your excess business loss will be included as income on line 8P of Schedule 1, Form 1040, and treated as a net operating loss, or NOL, that you must carry forward and deduct in a subsequent tax year. For more information about the excess business loss limitation, see Form 461 and its instructions. Reportable transactions. You must file Form 8886, Reportable Transaction Disclosure Statement, to report certain transactions. You may have to pay a penalty if you are required to file Form 8886, but do not do so. You may also have to pay interest and penalties on any reportable transaction under statements. Reportable transactions include 1. Transactions the same as or subsequently similar to tax avoidance transactions identified by the IRS. 2. Transactions offered to you under conditions of confidentiality for which you paid an advisor a minimum fee. 3. Transactions for which you have or a related party has contractual protection against disallowance of the tax benefits. 4. Transactions that result in losses of at least $2 million in any single tax year, $50,000 if from certain foreign currency transactions, or $4 million in any combination of tax years. Whew, could you imagine having that amount of losses? Well, and 5, transactions the same as or subsequently similar to one of the types of transactions the IRS has identified as a transaction of interest. For more information, see the instructions for Form 8886. So basically, they want you to let them know if there's anything funky happening so they can look into that. They want you to help them do their job. Okay? Small business and self-employed tax center. So this is just saying if you need help, this is how you can go about getting help. There's also a gig economy tax center for more information about gigs. And then photographs of missing children. They participate in this organization, so you may see photographs and tells you how to get in contact with them if you recognize a child. So join me next time so we can start going into filing and paying business taxes to ensure that you are doing everything that you're supposed to be doing in regards to the IRS tax guide for small business owners using the Schedule C. So I'll see you next week.